Good afternoon, everyone. I'll say a few words in Hebrew first. קודם כל, שלום לכל החבר'ה בארץ. אני מדבר באנגלית, אבל זה לא בגלל שאני לא רוצה לדבר בעברית. אז אני מאחל לכולכם חג כשר ושמח, ואנחנו נעבור לאנגלית. Dear friends, first let me say it's very nice to be here today, and thank you very much to Yair Sar, and I recognize Shmuel Mordechai, the controller of the Israel Diamond Industry, and all the other officials, and Reuven Kaufman, of course, a good friend from New York. I'm one of the guys who's actually a member of the New York Exchange, New York Diamond Dealers Club in, it was 1976, okay? And in the Israel Diamond Exchange, I think 1994. So I want to thank the Israel Exchange for this opportunity to speak here today. I want to also thank our clients, some 1,000 companies in Israel that actually work with us on a regular basis. And I want to thank our team, the people who make Raffoportt work. It's not me. I'm already in Alta Kaker. I'm already staying as much as I can in Yerushalayim. But it's Miley and Yoshua and Amit and Savil and really 65 people that we employ in Israel already for many years. And I want to thank the people of the Raffoportt team and our clients very much for supporting us through the times when prices go up and also for the times when the prices sometimes go down. So thank you very much to everyone here. The Raffoportt Group, I'll take just a few moments to explain a bit about us. A lot of times people see different parts of our organization, but they miss other parts. We're in the business of providing added value. We're a very strange company. We don't trade diamonds for our own account. And we provide services to the jewelry and diamond industry. We're U.S. owned and operated, which means we comply with OFAC regulations, Patriot Act regulations, anti-money laundering regulations, and we have a lot of restrictions, particularly lately, on how and whom we deal with. We're 180 employees worldwide, 9 offices in 7 countries, New York, Las Vegas, Antwerp, Ramat Gan, Mumbai, Surat, which is an important place. I would advise people to visit Surat, Dubai, Hong Kong, and Shanghai. And we're one of the few companies that have offices and operations both in Ramat Gan and Dubai. So that's kind of unique about us. Everyone is familiar, probably knows about our price sheet, about our market information, but we have excellent research reports and analysis. There's 14,400 people that actually pay for the price list in 114 countries, and 68,000 people that get our trade wire every week. So we have a little bit of a distribution that we are communicating to a lot of people around the world on a regular basis. RapNet, our trading network, has 3 things that are great. Prices, even if you're not buying from someone else who is a RapNet member, you see prices that Martin Raffoportt does not set. Those are prices set by the market, asking prices. You see availability, who has what, and you get global connections. I think the Indians and the Israelis were very successful making new connections, meeting new companies overseas, particularly in China and the Far East, using RapNet. We are the world's largest diamond trading networks with daily listings of $6.1 billion, 950,000 diamonds, and 8,100, actually that's a wrong number, there's 13,000 members in 82 countries. Every member is run through the OFAC terrorist database, and we maintain compliance with all RapNet members to certain basic levels required by the United States government, OFAC government regulations. RapX, we are going to be introducing very shortly, will be a bid-ask market for certificates, like a NASDAQ, like a stock exchange, and we will guarantee delivery and payment, and it will be click and buy. So it's going to be a very good opportunity for Israeli firms to sell their diamonds to other buyers in a very fast and efficient way with guaranteed payment. Almost done. Laboratory services, as you know, and I thank everyone here for working with us with the GIA for so many years. We handle over $4 billion of diamonds a year. It's about, 300 to 500,000 stones. Very nicely, in Israel, we're introducing Rap Lab. Shmuel Mordechai licensed us a little while ago, and we are going to be issuing certificates in Israel for Israeli companies in the very near future. It will have some very interesting electronic capabilities that are not in the market today. Raffoportt Auctions, we just had an auction last week. We are the largest recycler of diamonds in the world, and we create tenders, and we're representing Cash America and most of the big pawn shops in the United States. And we sell, actually it's more like 70,000. This month I think we will sell 100,000 carats of polished diamonds via tender in Hong Kong, Israel, and New York. China trading services, if people want to go to China, we're available for you. We have importation rights, and we do some buyers groups and introductions. And I guess this is the most important thing that I want to say, which will carry through the presentation today. We're a value-based organization. And most companies just want to make money. And we want to make money too. But we have this thing about free, fair, honest, transparent, efficient, and competitive markets. And so you say, when are you going to go up with the price list? Should you go up with the price list? Should you open a new business? Should you represent, I don't know, a rough company from Africa? It's always going to go to this point. Is it fair? Is it honest? Is it transparent? Does it create competition? We believe in competition. We think competition is good for markets. And we also believe very strongly in ethical fair trade. So we have turned down tremendous amounts of businesses and money because it didn't fit our value of what we want. And I think companies that succeed in the world today almost always are value-based organizations. As I said to my wife, I said, Rivka, you have no idea how much money we made last year by what I did not do. So you define your brand not only by what you do, but what you don't do. And walking away from things and not getting involved in things is as important as getting into opportunities. So we're a value-based organization, and you'll see that in what we present. Okay, let's get to the business of the speech. So what's going on? First of all, diamond prices, supply and demand, is one of the major issues. Will prices go up? Everyone asks me. So we're going to talk a little bit about the role of prices. Are prices important? How important are they? You should think about prices in terms of two things. External forces, things like the United States economy doing well, the rate of the dollar against the renminbi, the economy of, say, China, and a lot of things that are totally beyond our control. Interest rates, okay? Those are external forces that impact the diamond industry. So the fact that the Hong Kong show did well in 30 and 40 pointers has a lot to do with restocking after the Chinese New Year's, which is the new version of Christmas in the Far East. So there's things that are happening beyond our control that are going to impact prices. And then there's internal things that happen within the industry. If it's the price of rough, if it's things that are happening in terms of the GIA or the markets or whatever have you. So there's a lot of different things, and we should be very careful looking at external things as well. Often, we look at the local things that are happening without lifting our head up from the loop or from the table to see what's going on in the rest of the world. For example, one of the reasons the diamond prices or the diamond industry is doing so well today is what? Stock market surges in the United States. People feel rich. So even though there's huge problems in America, problems involving health care costs doubling at the end of this year, increased taxes, and the sequester in Washington, where I was last week, the fact is that the stock market boost has given everyone a good feeling, and that's going to impact diamond prices. Certainly, we don't control that. Now, the role of the U.S. and Israel, and we should face the fact about India and Dubai. India is a tremendous competitor. And Dubai, where there is a conference today with all the mining companies, is a huge market. It's one of the few markets that exports more than it imports without having to manufacture anything. That's interesting, and we'll talk about that. But, Belgium is dying. Sorry to any Belgians here. And Dubai is taking over. Will the same thing happen to Israel and India? What are we doing in Israel that assures our place in the diamond industry that the Indians aren't going to do cheaper and better? We have to ask those questions. We have to think about those things. And we also have to answer the questions, which I hope I can do today by giving us some ideas and some direction. So how do we ensure the role of the U.S. and Israel diamond trade centers? So this is a question you should think in your mind as we do our presentation today. I'll answer them at the end of the talk. But these are the questions. What is the unique selling proposition of U.S. and Israel? What is special and unique and different about us than other markets? USP, unique selling proposition. How can these centers of Israel and the United States make money? What's our trick? What do we have? What's our edge? And how and where do they add value? Where do we add value to the diamonds we process? Where does the human intellect, the capability of our people, express themselves? And these are the things we want to concentrate on so we can ensure our future. So let's look at the world. First of all, the diamond trade in general, These are very rough numbers. There's $15 billion worth of rough in the market value, not the mine value. $23 billion in polished, and $50 billion in diamond jewelry, say set diamonds. That's $35 billion of added value on the table. How much of this $35 billion do you think Israel is catching? Anybody tell me? Anybody have an idea? That's what I want you to think about. How do you get a piece of this pie? My friends, it's sadly peanuts. The added value of Israel to the diamond industry versus exports minus imports is only $200 million. Do not tell the new Minister of Industry and Commerce. Okay? Don't tell him this, okay? Because we make a lot of noise. But we have to think about that number, and we'll get to it in a few minutes. So that's our pie, $35 billion. Now, that includes retailers like Tiffany, and it includes manufacturing and a whole bunch of other activities. Now, the story about the diamond supply chain that everybody sees, oh, look, it's going to be great. Mashiach is going to come. Now, Mashiach will come, everybody. The only thing we don't know is when, okay? And so, like my father used to say in Yiddish, he said, "Jeder is beschert as a millionaire, and a leibtis and a nicht," which means everyone is destined to be a millionaire. Some people live that long, and some don't. And so the point here is that, yes, long-term, we expect demand, especially represented in dollar terms, as you see on the right side of this graph, okay? I play with these things, okay? That's going to be up there because the dollar is going to get weak and then 100 things are going to happen. The red line is the diamond supply, which is pretty much known to us. It takes about 10, well, actually more like 15 years to get a mine going with the permits and everything. And while we may see the legitimization or the expansion of mines in Angola and other places, generally speaking, we have a pretty stable supply. The difference between the yellow line and the red line is prices, everybody. Some people draw these graphs wrong. They're both prices. That's nonsense. The amount of carats, that means 30 million, saying 220, are going to attract 320 million carats or something, are going to attract $30 billion. So basically, there's going to be a lot of money chasing diamonds. The curves will not be smooth. But this is the long-term story why some of the mining companies would rather leave their diamonds in the ground, leave their inventory in the ground, not pay taxes on it, not sell it now. So if you're a company with a diamond mine, you don't see a lot of new mines coming, and you see this, I'll explain it in a minute, which is a big population of India and China coming. You say, hold it, wait, why should I sell now? And that's happening in the diamond industry today as Russia sells to Gochran and holds back some goods, De Beers holds back goods, and that's been an issue that people believe that, don't worry, the mining companies believe this. Whether it's true or not is interesting, but they actually believe this stuff. I believe it too. So what's happening in the world? Why the big story? Look, China and India have 2.5 billion people. I don't know how many Israels that is. It's 1,000 Israels? That's only 6 billion. 6 million times 1,000 is okay. So that's like, just thinking here, 6 million, 1,000 Israels, 500 Israels, something like that. Okay? So that's a lot of people. And if you look at the numbers, it's not just the number of people, they're poor. That's a good thing. Why? The only thing consistent, my friends, is change. The only thing I can promise you is that the future is not going to be like today, and poor people will get richer probably, most likely. So all those poor people out there with $9,100 a year, or in India, $3,900 per year of income, they're going to become middle-aged, middle class. They're going to get more value to them. They're going to be more creative, more productive. There'll be more middle-class people, and there'll be more millionaires. And consider the fact that the average age, I don't see it on this graph here, the population under 25% in India is 48%. The average age is 26. You're talking about 100 million new middle-class consumers in China, India, and the Far East every year. 100 million new customers, not to mention the millions of millionaires. No, the demographics are such. It's an idea, I have an opinion. The physical number of people are such that you're going to have more diamond demand without question. What kind of diamonds, who they'll buy from, how they'll buy, very interesting discussions. Now, the U.S., if you take a look, and Europe, are like older people. They already have diamonds, they have jewelry, but they're very wealthy. The per capita income in the United States is $49,000 versus, say, $4,000 in the United States. It's 12 times as rich. So that wealthy people in America and in Europe have diamonds, but they're not the growth. Brazil's going to be strong. So I'm trying to say to you is that the outlook demographically is very, very strong. If you looked at the dollar, it'll probably get weaker because, as you can see, the amount of debt the United States is carrying, $15 trillion, Europe $16 trillion, that's going to slow those countries down and, as they get older, have an impact. So the bottom line is there's a lot of people out there that are going to be middle class that are going to buy diamonds, and that is where this demand curve, this yellow thing, comes from. Now, on the supply side, you can see we're talking about something like 15 billion. I'm not including the smuggled goods. This is stuff from the Kimberley process data for 2011. So I'd say 15 billion, maybe 15.5 billion. 123 million carats. Okay? So, all right, I can see what's interesting here, as you'll see in a minute. Botswana, Russia, Canada, most of the goods are concentrated in 6 or 7 countries. That's where it's such a concentration of diamonds in a few countries. And even more to the point, look at the companies that own these diamonds. De Beers, Alrosa, BHP, or Rio Tinto, ZMDC is Zimbabwe, which I'm not including. They're like, let's see, 86% of the rough diamonds come from 7 countries and 93% from 6 companies. De Beers, Alrosa, BHP, Rio Tinto, Gem Diamonds, and Petra. And there are other suppliers who are legitimate too. But that's only 6 companies, 93%. The concentration is unbelievable. Now, this concentration of supply is going to change to our benefit. The first point of concentration is that you have Europe and the United States having a disproportionate amount of diamond demand today. The rich are very rich relative to the rest, and they're absorbing a lot of diamonds. And if change happens, the U.S. and Europe are going to buy less over time, relatively speaking, and India, China, and the rest of the world are going to buy more. And change is good for us, good for the Americans, good for the Israelis. Change is how we make our living. If everything stayed the same, no one would need us or want us. The fact that new customers are coming into the market is an opportunity for you smaller companies, which are very important, and different countries to come in and play the game. Because if you have one big customer buying from one big company and nothing changes, they'll just keep buying from each other. How's a new guy, how's a little guy going to get into the industry? But if there's new buyers, new markets, new things going on, this opens up opportunity for those people that can get into those markets in the most efficient way possible. So there's a population money imbalance in the world today. And that is going to be changing over the next decade. That's a part of our opportunity. Now, the thing about rough, which is very dangerous, as you can see, that red line is showing you millions of dollars of rough sales. This is facts. This is forecasts. So there were, in red terms, like I said, $14.5, $15 billion of sales. But the supply of diamonds stayed flat, went up and down a little, to about 125 million carats. So what happens when you get an extra, 74% in dollars, and you only increase the supply of diamonds 3%? That's a 71% price increase. Boom, let me see. Rough prices, flying upwards. The reason rough prices, you can see it here in terms of the overall worldwide rough data from the Kimberley process. You can see it in percentages here a little bit, but you don't really need to see the actual numbers. You can just see the movement of the red up and the yellow flat. And here's the De Beers sales, DTC sales. Same story, higher prices, but less quantity. All of that means rough prices have gone crazy, have gone up hugely since 2009. And we know there was a recession and there were problems, and as you can see from the red line over here, when 2008 hit, rough prices came down sharply, 50%. And polished didn't come down as much. So when times get rough, the rough gets it. Well, frankly, I think they deserve it. But the bottom line is rough really collapses. Polish comes down a little bit, and then you can see that rough gets higher than polished. And this is actually what happened. This is RapNet prices, by the way. This isn't even my price list. So this is asking prices in the market, prices set by the market. Now, 2 points. One is the severe drop. Anyone who bought rough over here, they did very well. They had to have a lot of bitachon and emunah. They had to have a lot of faith and confidence. But that's an opportunity. A lot of companies made a lot of money when rough prices came down so sharp. Now this problem here, as like it was over here in July of 2008 before the crash, this is a big problem. Because rough is ahead of polished. Not good for manufacturers. And it's consistent, and it's persistent, and it keeps happening all the time. It's not good. It's not healthy. Because it means if you buy rough and you cut polished, if nothing changes, you lose money. You're a bunch of gamblers. Go to Vegas. They have nice shows, and they give you free booze. But here you're actually gambling against yourself, because if you bought it even on, so rough prices can go up or down, polished can go up or down. But we know that polished does all kinds of strange things, and you're already behind the 8 ball when you manufacture. Now, again, I want to emphasize, there are manufacturers who are smart, who are sharp, who are focused, who are capable, who outrun the market. They outperform these numbers. They buy. I was talking to one guy today, and he said, listen, I buy, I'm very good, I make tons of money, it's wonderful. He knows what, he sits on the goods himself. Now, I'm talking about big business worldwide. So I support the small people, the small manufacturers. They can outrun this. But big guys can't. So if rough is ahead of polished, you've got to ask the question, why is rough higher than polished? You got to answer that. You got to look at that thing. If you're putting your money into this industry and you're buying that rough, you have to stop and think, what are you doing? Why are you doing this? What's your expectation? Now, the situation is driven, we'll talk later, by easy credit in India, the problem of the round tripping, which we'll talk about, the excess amount of money that the irresponsible banks, I will say that again, irresponsible banks have given the industry for rough, and that has created a speculative Ponzi schemes. What do I mean by speculative Ponzi schemes? There was once a time in Holland where they had tulips. Anybody know about tulips? There was a time in Holland when the tulips were becoming like speculation, and people bought tulips not to have tulips or to give to their wife or girlfriend. People bought tulips because the price of tulips was going up every day. And they just kept buying tulips. Why are you buying tulips? Because he's buying tulips. Tulips are going up. One tulip was worth 2 houses at the peak. I'm talking about, I think it's something in the 1600s now. This is not something that Rafferport created. It's not the bear's fault. It's the nature of markets to go crazy when people create these shortages. So what happens with rough? Since rough is in tight hands, people buy it. They have a bunch in the safe. They go to the auction. They get credit. They buy more rough. And then after they bought the more rough, then they start selling the stuff that they bought cheap. Then they buy some more rough. Now, as long as they have enough money to keep pushing the price of rough up, and as long as there's enough suckers, how do you say suckers? Let me think. Friarim. Okay, I think I knew how to say that. Yeah. As long as there's enough friars out there to buy it the next game, I'll say make money. You make tons of money. And the banks make money too. They're not innocent in this. Okay? And so they say, good, let's play the game. And after a while, if you've won enough money in the Ponzi scheme, you don't mind giving some back occasionally. And in fact, this is what's happened to rough over this period of these high red lines. It's actually what happened. So this Ponzi scheme of rough is very dangerous. There's excess liquidity. Look, like if I in this room gave everybody, and I said you can have $100,000, every one of you, but you can only spend it in this room over the next week, the price of a schnitzel would go crazy. So if I've got banks in India that say 30% of our loans have to go to development industries, and the diamond industry employs 1 million cutters, say, And it's designed, it's designated an independent industry. And I'm a banker. I want to lend money. And the easiest place for me to lend my money is to the diamond industry. So I'm going to give them money. What are they going to do with the money? They have to buy rough. So you increase the money supply, and the price goes up. You don't need a PhD in economics for this. That also. That's where the round tripping comes in. I'll get to it. Actually, the word's real estate, not just real estate, by the way. It goes into foreign currency speculation. It goes into stock markets. But listen, if your banker is a friar, why should you take the money? Do you think Israelis would be different than Indians if the Israeli banks had a policy like they did in the 1970s? You have to lend money to the diamond industry. If the money's there, you take it. We're smart people. We're diamantaires. Which raises another interesting question. Are higher prices good for the diamond industry? Now, this is a funny story because everybody keeps bugging me. When are you going up? Come on, go up, go up, go up, go up. And I'm looking at these people. And it's sort of like they're on drugs. It's like, go up, go up, go up. What happens when you go up? Well, you feel a little better because your inventory, theoretically, is more valuable. Although in some instances, when we go up with the list, we see the discount actually stays the same, goes down, goes up. It's not so clear. We've actually seen the discount go up. Sometimes we went up in half carats recently. So, looking at the market, if you raise prices, short term you get a little drug kick. But long term, the cost of the goods go up. You have to convince your buyers to sell you more. You need more credit from the banks. Your insurance goes up. And you're not well competing with other luxury products like Apples and iPads and God knows what else, cars, vacations, you name it. Higher prices are not necessarily good for the long-term diamond industry. Our business isn't to speculate or to make money on inventory. Our business is to buy at X and sell at X plus Y. If we're running good businesses, the price of the material should not make a huge difference in our profits. Tiffany doesn't make money on higher prices of inventory. They make money adding value to whatever it is they sell. We make money manufacturing, merchandising, talking and dealing with our customers. If we become addicted to the idea of making profits from higher prices, we become like drug addicts. We need the next fix. We need the next fix. We should make money based on adding value. And that's one of my major points today. We shouldn't think short term. We should think of the impact. Thanks a lot. We should think of the impact of what happens when Rapport goes up with the list. What happens to rough prices? We just get squeezed and squeezed and squeezed. Rough goes up, then you got to convince the customer. So I think it would be wise for us to chill out a little. Think about how we can make money when prices don't go up and even when prices go down. Wonderful water. Now, looking at polished prices, we also see trends. Things go up and they come down. You're looking here at RapNet prices for all these different sizes. And they tend to go in the same wave. We're waving. And what's that new dance they do? It's called what's it called? The Harlem Shake. Harlem Shake? All right. You should do the Harlem Shake here. That'd be cool. All right. But they're doing the Harlem Shake. Okay. Diamond prices do the Harlem Shake. Okay. And they all do it. It's cool. Yeah. I should stop everybody. Maybe when we finish, we'll just do one big Harlem Shake. Okay. We'll have to get it on YouTube. What? All right. I think it's cool. So we'll look at one carat, which is the yellow line, which is pretty much an indication very similar to the rest. Down 23%, not 50% like the rough. Up 56%, down 22%. This is the reality of the marketplace. So things go up and down, sometimes a little sharply, sometimes not. Get used to it. Get over it. If it's hot in the summer and it's cold in the winter, are you surprised? No, we accept it. That's how it is. If prices go up sometimes and come down sometimes, we should be used to it. We should expect it. We should know you have Christmas, things get stronger, and you have Chinese New Year's, things get stronger, and then in the summer maybe things get quieter, or there's different economic situations. President Obama decides to do this, maybe something happens, he decides to do that, maybe something else happens. Just get used to the fact that our world is changing, including prices. Melly, no Rappaport price list really used for Melly. Huge increases. By the way, everyone should be aware of the substitution effect. One of the reasons diamonds are so cool is that you don't price them like bananas. There's the scarcity argument, but it's very hard sometimes for diamond prices to go down or up so much because people can substitute. If a GVS1 gets very, very expensive, so then someone will be a FVS2 or an HVVS2. So you can always change things. You can make a piece of jewelry with 1 carat total weight using brown goods, using more melee, using top silvers, top TTLBs. There's a million ways to skin the cat. And so diamonds have a very interesting attribute that they don't go up and down in a uniform way necessarily because they're very, wiggly. They're very substitutable. And that helps a lot in terms of being able to work with diamonds. Melee increased a lot after 2008 because more buyers for cheaper goods emerged. The sale of less expensive jewelry became more popular, both in India because India was a growing market and the United States because of the recession. So you're going to see things happening that are going to be pretty exciting. I mean, if you own inexpensive melee. These are actual auction results, transactions prices at Rappaport auctions for sorted goods. So these are very accurate numbers here. By the way, people wondering about the Rappaport price list and the relationship between the Rappaport price list and RapNet. You can see here the RapNet goes down. We don't go down so fast with the price list. We probably should. But the red line is changes in the 1 carat Rappaport price list, and the yellow line is the changes in RapNet. So in fact, we're pretty conservative in how we move the benchmark price. And everybody can see the RapNet prices as well. So you should see, a little bit what's going on there. We're pretty conservative, but probably too conservative when it comes to going down with the price list. Okay, so polished prices. No matter what happens with rough prices, polished prices are highly sensitive to external economic forces. You can't push polished. You can push rough. You can play around with rough. Very hard to push polished because the buyers look at global economic growth, interest rates, foreign currency rates. If the renminbi is stronger against the dollar, if the rupee is stronger against the dollar, diamond prices are going down in China and India. People will buy more of the stuff. So dollar terms prices are very sensitive to foreign currency stock markets. The perception of wealth. You live in the stock market, you've got $1 million invested, you make 10%, you made $100,000, you feel rich, even if you haven't sold your stocks. You feel rich. You are more likely to buy your wife or girlfriend a diamond piece of jewelry. And political uncertainty. Consider what's happening in the Arab Spring or the Arab Winter. Think about what's going on around the world in Russia and other places where people are uncertain. Think about changes in Brazil and South America. There's a lot of opportunity out there for diamonds, tremendous opportunities. But these things change, as do diamond prices. Okay, let me stop for a minute. Take a sip of water. Everybody okay? Yeah. Nobody sleeping yet? Good. Okay, let's take a deeper look at. So what's happening in Israel? Well, everybody has a lot of different things to say about markets. So I said, let's look at some numbers. And basically what I said was, what comes into Israel and what goes out of Israel? All the rough coming in, all the polish coming in, all the rough going out, all the polish going out. What is the added value that remains in the country? So if you add up all the imports, actually add up all the exports, and you subtract all of the imports, in 2007, Israel produced $824 million of added value. That means the wages, the salaries, the bonuses, all the official business, 824. And it went up to 917 in 2010. And then it went down to 2,262. 58% drop in 2012. I mean, look, some Israelis are manufacturing in Botswana. So maybe that doesn't count. Maybe it does count. It's not part of this numbers usually. But you can see here that we need to get our exports up. Israel, get your exports up. Don't spend your time with rough. Get the polished sold. Sell more polished. Can't make that clearer. Vital, important. And how's India doing? These guys are in trouble. I know everyone thinks India is great. India is screwed. Okay, really screwed. Let me explain to you what's going on in India. There's something called the Diamond, Export Promotion Council. Okay, what is it? The Diamond, the Gem Jewelry Export Promotion Council. How could I forget? I'm a member. Okay, the GJPC. Now you'll notice that the key thing about the GJEPC is the Gem and Jewelry Export Promotion Council, not the Gem and Jewelry Import Promotion Council. Now what's happened in India is that in 2007, the minus numbers means that what stayed in India. So they actually did all their business, and when everything was counted up, $546 million of diamonds were sold in India. Now in 2009, they smartly, correctly, got rid of their import tax. Okay? So the diamond imports went from $7.9 billion to $16.9 billion. Woo! Whoa! Where did it come from? Okay? And their exports went up to 25. What happened here? What's going on? They must be smoking some excellent ganja. What is going on? Rough, boom, look at those numbers. Well, what was going on was they put a what happened is they freed up the imports, and the banks wanted to lend money on exports. So they imported the goods, and then they exported the goods, and they exported the goods, and they imported the goods, and they exported, and they imported, and they imported, and they exported. Regular chad gadya. And what happened there was that they kept getting all this money from the banks based on their exports. Why it is that Indian banks are incapable of adding and subtracting numbers is beyond my understanding. Loans should be given on your net exports, not on your total. So they just did this because they gave them the money, almost like my Kablan in Israel. But that's another story. The bottom line is that they just kept getting more money from the banks, so they kept importing and exporting. As long as the checks are being written, they're going. And so they got to the point where instead of exporting diamonds and getting money for India, they ran a deficit of $2.3 billion, $6.5 billion deficit in 2011. They milked that country like moo, moo, moo. Unbelievable. Really cool. If we did this in Israel, we'd all be in jail. Okay? And then this year, only 2.7 because they implemented a tax. They didn't know what to do. They put a 2% tax. Why they couldn't tell the banks only lend money on net exports, I don't know. So probably the 2% tax is a protectionist tax to protect these poor Indians from these rich Israelis. Ha ha. Okay? But the bottom line is that this is what happened. This is not normal. 7 to this, back to 5. Not normal. Which means that internally, you don't just need interest rates to go crazy, which they will. You don't just need the dollar to go nuts, which it will. Even just internally within the diamond industry, stuff can happen that really whacks you out. And that's what happened with India. Who's at fault? The banks, the government, probably. Who's not at fault? The smart Indians who were able to grab money while it was on the table. I don't believe anyone here would have done differently if the Israeli banks were lending money like that. And so we had this artificial thing. So you know why rough prices went up? Because they had so much money and they had to buy rough to get the loans, to buy real estate, to buy whatever they wanted to buy. Actually, it was the carry trade, as I'll explain to you. So Indian net imports shot up, and then they're shooting down. And they'll probably continue to come down a little bit because the cycling will stop, which means the credit will stop, which means the extra money for rough will stop, which means the speculation will stop. So it's like you have music and everyone's dancing with the music and there's only so many chairs. When the music is playing, you have to dance. You're not allowed not to dance. But when the music stops, you better have a chair. The music is going to stop, is already stopping in this thing. So you need to be careful when you're playing around with rough that may be bidded up by this Ponzi scheme stuff. So, Indian import and export surge, import taxes, subsidized bank financing, excessive imports and exports, 2% tax on polish comes up. Excessive demand for rough to obtain financing. That means they're buying the rough not to cut it. They're buying the rough to recycle and to get more money. Increase in supply of money raises prices, like I explained. Use of extra financing, over-leveraging. Who said real estate? And the carry trade. Does everybody know what the carry trade is? Famous thing, the carry trade. All right? These are interest rates. These are the dollar interest rates that you could get money in dollars. And this is the interest rate in rupees. So if you did an export and an import and an export and you got the money, all you had to do is change the money over to rupees, lend the rupees. You got 8% against 0 or 1%. Maybe you got 9%. Or maybe you financed another diamond guy in India who was also importing and exporting. Okay? So this cycling business was amazing good business. This was the profits. 6%. Sleep at night. No problem. 8-10% if you're willing to finance another Indian buyer. So this was going on. And these differences are very significant. So understand that some of the things we're seeing in the diamond industry had to do with the recycling. Now, another thing I'm warning everybody here. You see this flat line? It looks like the Federal Reserve Bank of America is dead. It looks like they're dead, right? Flat line. They're not dead. They're big mamzerim. Okay? They're not dead. Here you're going to get a tchias mason. You're going to get higher interest. Interest rates are not going down. What's the probability of interest rates going down versus the probability of interest rates going up? 100%. So if interest rates don't go down, they're going to go up. And when interest rates go up and you're very leveraged, you've convinced your Israel Diamond Exchange and your IDI, you've convinced the banks to lend money to all the nice people here. And you borrow the money. And then interest rates go up. You're screwed. How are you going to pay it back? You're borrowing at 2-3%. The banks in Israel are totally greedy. I hope the new Minister of Industry and Commerce will give them a mishaberach, okay? But Mordechai will help, I hope. But this is ridiculous, the charges they make here. Obscene profits, okay? But in any case, the idea that you're at zero interest rates is not going to be forever, and I'm warning everyone here, when you're planning your business and you're growing your business, do not become reliant on the banks. It's like doing heroin. It's evil. Don't do it. Take a little bit of money if you have it. Do not risk your business on loans from banks because interest rates will go up at some stage. And when they do, you will not be prepared. So be careful. Be very, very careful about this danger lurking. Yeah. 2 years it'll go up? You know? You sure? Well, we can buy. We can gamble on that. Okay, I wish I knew. I think that the only thing that I can bet on is that I'll be surprised. Okay, but if it's 2 years, so then fine. Then for 2 years the music's playing, dance away. If it stops earlier, sit in Mordechai's chair. But fine, whatever. Now, the Indian government, in dealing with all this, you have to understand that sometimes governments are your friends, sometimes governments are your enemies, and sometimes governments are simply idiots. In the case of India, the government is simply an idiot. India, I didn't say Israel. I haven't talked about Israel yet. It's coming. No, but okay. What do I mean by idiots? They're busy. Think of what happened in India. India decided that a company called, what was the name of the phone company there? Morty, who knows the name of the phone company? There's a, what? Vodafone. Nice company. They say, come to India, come to India, come to, you be my friend, come. Zimbabwe does the same thing. Come. You come, you sit down, and then they schmeiss you, they whack you. So Vodafone goes to India, follows the laws, and the Indian government wakes up one morning and says, you know what? You owe us taxes from 10 years ago, $1.5 billion, another $1.5 billion or something of penalties and interest. So now, good morning, you owe me $3 billion. They say, you got to be kidding. They go to the courts. Supreme Court of India says, nonsense. They don't owe you any money. Government of India passes a law of retroactive backwards taxes. Stable environments. Anybody who wants to invest in India says, whoa. Then they go along, they hit a 4% increase on gold overnight, without telling anybody. 4% import tax, which then raises the price of gold so people want to buy it, so everyone wants to smuggle it now. And then they tell everybody, all the money you have in the bank, 50% has to be put into rupees. And then the rupee crashes. So they did some things that caused people who are rational not to want to invest in their country. And they are today suffering from severe foreign currency problems. So a government has the ability to shoot itself not in the foot, but in the head. And this is something that has actually happened. So they don't even listen to the diamond industry anymore, because when they look at the diamond people, they say, you thieves, you people who have, where was that India story here? You guys who ripped us off by, I'm just looking for the numbers here. Okay, I don't see it. That remember I told you saw it before, the $6 billion, you know? You took $6 billion out of our country. Now you're telling us what to do. Go away. So the diamond industry, the GJPC, lost a lot of its mojo, a lot of its political power. The government is kind of on the ropes. Now, the best thing that India did when they raised the price of 2% on the imports, which isn't a significant amount, but it's enough to destroy the ability of India to have a diamond trading center for polished. I can tell you that the price of real estate in Dubai went up after that increase. And I can tell you that this is one of the greatest opportunities for Israel. Thank you, India. Okay? Because when they put a tax on the imports of polished diamonds, it means they won't be the polished diamond trading center of the world. Who should be the polished diamond trading center of the world? Who? Israel. U.S. It's our opportunity. Okay? And if we don't take it, shame on us. Okay? So, Indians are great manufacturers. And they are developing merchandising, marketing, and sales. They are developing that. But they are not the central market point in the world for polished diamonds. Let them chase their rough all the way to Zimbabwe. Let them have their meetings with their ministers and all that BS, okay? Let them do all that. We should go after the polished. Let them chase the rough, the high-priced rough, the overpriced rough, the speculative rough. We should also buy rough if we can, if it's legitimate, if we can make money. I'm not against rough. I'm not against manufacturing. But I am for merchandising, marketing, selling, branding. I am for adding value to diamonds. And that's what we should be thinking about here. How do we grab that market for polished? I can tell you that's what Rafferty was thinking about all the time. That's what we do. Now you can see here that Israel is a peanut compared to the movements of India. This is the Israel and India's net diamond exports. Israel's wiggling around over the zero between a $0 and $1 billion. But in India's terms, $1 billion is nothing. They went down all the way to $6.5 billion of losses. They jump back up here. I don't know, maybe they can jump up here. But this is an interesting graph. This yellow line needs to go north. We got to get some of that Indian mojo. Okay, they're bouncing back from artificial stuff going on with recycling. We need to increase exports, everybody. That is the name of the game. The U.S. needs to import more from Israel. Israel needs to export more to the U.S. and China and other countries. And let's look at those U.S. markets. Now, the U.S. is cute. Once it was great, and now it's just cute. What do I mean by cute? It's down to $3.250 billion. The negative number means the amount of imports over exports. So the U.S. is absorbing like a sponge only $3.25 billion worth of diamonds. It used to take in 7.768. Now it's down. And it went down last year. And Israel went down last year. And it went down last year. So we have to be careful because the U.S. is very sensitive, very old, very taxed. President Obama is a tax and spend politician. He's some kind of a Robin Hood. Oh, that's Robin Hood. And what he wants to do is he wants to take the money from the rich and give it to the poor. He's elected. He's smarter. He realizes he can kill the economy there. But bottom line is that we're around here. We need to go back up there, so we need to think about ways to sell more diamonds in the United States. Very important. Now, I don't know if we can, because the U.S. is old. It's overtaxed. But I would just point this out as well. Look at India. India has held steady from $2.6 billion to $2.8 billion to the United States. 2009, it was at 1.6 billion. And Israel is at 2.3. Okay, we can be bounced back a little bit, but we're only $100 million more than India in our United States net exports. This is what the United States imports net from Israel and from India. And Belgium's 964 million and heading south very fast. Okay? They're like the walking dead. No offense to the Belgians, but they're having problems. Okay? Now, if you see this in graphic terms, you can see what our relationship with the United States is like. And the red line is going to show you basically a little bit above India. India has been making gains, and you can see Belgium just kind of mitchering along on the bottom. How about the hot stuff? China and Hong Kong. Now, I put China and Hong Kong together because everybody moves the goods between Hong Kong and China. Not so much China to Hong Kong, but a lot of Hong Kong to China. Also, this is the Far East represented because Hong Kong sells a lot to the Far East. This is a healthy, dynamic, booming cha-cha market. It's good. I love it. 7.3 billion. That's what I like to see. It's growing. It grew 52%, then 35%. It's flattening. Growth and flattening. That's healthy, by the way. No tree grows to the heaven. So if it grows and it flattens, it means it's sustainable. It means it's steady. It means it's healthy. This is a very good thing, everybody. So this is the market that we have to look at very strongly because I anticipate it to continue to grow and to continue to strengthen. And it's not just one show after the New Year's, but it's flat. So don't speculate with polished. Get customers, but don't jump up or down on the prices so fast. Maintain a nice, even, steady business. The people in Hong Kong are very smart. People say to me, when do you think Hong Kong will turn? Watch not Hong Kong. When do you think China will turn? Watch the Hong Kong Chinese. These are probably the most sophisticated diamond dealers in the world. They have plenty of money. They're very smart. And when the Hong Kong Chinese are buying, you can get a strong sense of that China is doing well is also good. Be careful not to run around in China selling diamonds on credit to little people or for cash or violating the laws. Don't break the law in China. Not good. How many Israelis have suffered? Just ask around. Don't do it. If you want to do legally, I guess you can deliver it to Hong Kong, of course, legally. Or, we can help you in China doing things legally. It's only 5% more that they pay anyways. But it's not good to be careful in dealing with China, but it is the greatest market you could ever imagine. Other than, of course, India is also great. Now, Dubai is an interesting story. Now, if you look at this thing, you can see that Dubai is actually the greatest added value of anybody in the diamond business. These guys added $1.9 billion. They exported $1.9 billion more than they imported. And since they have no mines, I guess it's profit. Or I don't know where the Indian government is on trading. By the way, India has now announced that they're going to be doing new evaluations on transfer pricing, which may bring this number down. And I don't know. It's just an interesting story here. But there's $1.9 billion there. The previous year, 1.8. Huge amounts of money going into Dubai. Huge amounts. Ostentatiously non-taxable profits. So if you're a company who was exporting, maybe even from Israel, send your goods to Dubai, mark it up 20% or more. We can see. Let's see. Rough is rough exports, rough imports. Let me see here. This is Dubai, right? 3, 5 polished exports. Polished imports and exports are roughly the same. Here's the big difference. So that's about 3.7 to 5.92, about 60% markup. Mark up your rough, export it, tell the country you exported it to. This is the price of the rough. Pay less taxes in Belgium, India, Israel, I don't know. And you keep your profits in Dubai. And that's so obvious, it's amazing. But this is what's been going on. So you can see Dubai shoot up after 2008. This is pretty much the demise of Belgium here that we're looking at. Not the demise, but the beginning of the end for Belgium as the primary rough markets and tremendous profits going there. Okay, so to finish up some of this stuff, let's see, we're at 5:30 now. This is the world large. I'm sorry I'm not walking down there to point, but that's like a whole other story. Easier for me to go here. Here's China and Hong Kong. 7.3. Now, we don't have Europe, Japan in this story. We simply took China, Hong Kong, USA, and India, and we added them all up. India is a big consuming market. 40, 50 million new consumers every year. So don't think of India as a diamond exporter. It's not. It's a diamond importer. And think of India as selling a lot of diamonds in their local things. So China and Hong Kong, $7.37 billion. U.S., 3.25. India, 2.756. Significant. And the total of 13 million from these three. Out of these three, China's at 55%. It's twice the strength of America. That tells you a lot right there. That's a tremendous story right there. And you can see the consistent growth in China, the choppy and bumpiness of India, and the rise and fall a little bit of America. Do I expect America to continue to buy? Yeah. At about the same rate as now? Yeah. Do I hope it'll increase? Yes. I think hopefully we can get to a $4 billion a year. But I am warning everybody, the government in the United States is increasing taxes. The stock market right now is boom time, so if it stays this way, I think there will be good business. But overall, healthcare taxes are going to go up in January, doubling, and you're going to see some less disposable income in the United States. So I'm warning people not to expect big booms in America. I do think there might be some good, healthy growth in China, perhaps. But in general, my overall view of the market, my expectation is we're pretty flat, like this kind of stuff here. You see, flattish kind of a thing, which is good. If we can make money in this way, it's fine. Okay, you can see what's happening in the trade centers, China and Hong Kong up there. The rise and fall of India's big business of imports, and Israel, USA coming down a little bit to where it was at around 2009. And I expect a relatively flatness. But this is like the story if you look at the world the way I do. Okay. I want to talk about banking and compliance. Look, the excess bank credit, as we know, I blame the banks. I think they're irresponsible, particularly Indian banks. I know that there was a statement by the GJPC. No, it's not true, but I don't believe it. I think that there has to be more responsibility. Look, in the end, the banks won't get paid. But they don't care. They've made so much money, okay, that it's okay if they don't. So what? You lose $10 million. You lose $100 million. So what? They're like guys at the casino that have made so much money at the craps table. They continue to play. But it is very dangerous for the industry, the bank credit. The banks destroy profitability by increasing rough prices and destroying manufacturer profit margins. The net consequence of the easy money is there's too much money chasing too few rough, which means that rough prices are artificially high, which is taking away our profits as diamond manufacturers. It increases risks because when interest rates go up, anyone that has big bank debt is going to be in trouble. And it encourages kiting. Kiting is when you take from Paul and give to Peter, and rough Ponzi schemes and rough speculation. So I'm not at all a fan of the banks right now. This is what diamond bank debt looks like. It's not crazy. It's $15.3 billion. Like I said to you, it's roughly equal to the size of the polished wholesale market. Okay? And I don't know, 1 year, if it's too high, if it's too low, I just think we have to be more careful about them. And I would like to point out something else. This is very important. Look, everybody, I shouldn't say everybody, a lot of people in the diamond industry, they talk and they do business and they wink and they, okay, you said, don't worry. And the banks start coming with all these paperwork, forms. They're making us nuts. Why would the banks be making us crazy? It's work for them too. Because the governments of the world have decided that they're going to control terrorism by paperwork, by trying to control the flow of money in the world. Now look, the banks paid $4.683 billion over the last year or so. Bank Leumi is just thrown in here because they're Bank Leumi and they're exiting the diamond business. Oops, should I have said that? Okay. But anyways, they're leaving the diamond business probably because of compliance issues. But the banks get hit by $4.6 billion. Don't blame them for their paperwork, which means it's important for the diamond industry. Martin, we have cocktails, etc. I'll be done in about another 5 minutes, 10 minutes, right? Okay. Anyways, the banks are very nervous, should be nervous. You should be nervous. I have no reason to believe that diamonds from the east and west coasts of Africa are not funding Hezbollah and Al-Qaeda. And wouldn't it be miserable if we had some explosion somewhere here in the United States that were funded by our purchase of diamonds or gold? Be careful what you're doing, please. You don't realize the danger and the risks involved in our business. and you got to control, be in compliance. Please, be careful who you're dealing with. Know your customer. But these banks are going to be tightening up and leaving the business. So if today I'm complaining about too much liquidity from the banks, it's possible next year or 2 years from now I'll be complaining about too little. I expect bank credit to tighten, to shorten, to become more difficult for the diamond industry, which essentially is a good thing, in the case of India. I don't know about other markets. So we're going to finish up pretty soon because the cocktails are coming. Diamond prices, supply and demand are the issues. Expect volatile demand and prices. Tax policies, stock markets, currencies, interest rates. Rough supply is going to continue to be manipulated. Do not trust your rough dealers. Okay? Polished will be available. You can always find some polished or substitute polished. Oh, there's no goods. I haven't seen any jewelry close because they haven't been able to find enough diamonds to sell. Hasn't happened. Expect higher interest rates and tight money. Lower prices are healthy and necessary. Absorb them, be happy with them, buy with them. Think of it as a stock market. Don't freak out when diamond prices in the Rafport list goes lower. It's good for us. Profits can't be based on price increases. Learn how to make money when prices fall. Just ask some Indian companies who did this in 2008 when Israelis were frozen. Profits are based on added value, not inventory. The role of the U.S., stop chasing unprofitable rough. Leave it alone. Don't touch it. It's chametz. Don't touch it. Leave it alone. Unprofitable manufacturing is for suckers, friars. Let the Indians manufacture and just buy their polished. It's okay. You don't have to manufacture. Just buy from the friars. You got the rough people squeezing over there. Just buy the polish. Small firms, including specialized cutters, should be supported. Support the small companies. Small firms are excellent vehicles of change and growth. Big firms get too much credit. They're too fat. They're too slow to move. They're too involved in the industry. Support little people who can cause change and make things happen. Almost done. The U.S. What? No, don't manufacture, buy the polished. Ask anyone. They made more money buying polished and selling polished than buying rough and producing. That's what I'm getting from the market, in Israel particularly. So buy the polished. You have to manufacture. And if you love your workers, give them a vacation in a lot. It'll be cheaper. Okay? But no one says you have to manufacture. Let the Indians do it. The U.S. and Israel should be the primary markets for legitimate polished diamonds. We should be the kosher diamond market. We shouldn't be selling Zimbabwe goods. We shouldn't be selling problem goods. We should differentiate our sources of supply, and we should be the #1 market in the world for legitimate polished diamonds. Stop chasing the mining companies. Oh, the bears is coming. Oh, this one's coming. Oh. What the hell? These guys are here to screw you and take your money. Chase the customers, not the mining companies. Create the best diamond merchandising, marketing, sales, and branding systems. Merchandise, what we do today here in Israel. Just do more of it and do it even better. The role of the U.S. and Israel. The ability of Israel and the U.S. diamond centers to get the right diamonds to the right buyers at the right time at the right price. That's it, baby. That's the game. That's what's going to ensure the survival of Israel no matter what India does. Right diamonds, right buyers, right time, and right price. Do those 4 things and you will win. No question. The race for control of the diamond industry is not about manufacturing. Stop chasing the stupid rough. It's about marketing. The people who inherit this business won't be the people who are going to be diamond, rough grabbers. Do you want to buy shares in Tiffany or Rosie Blue? Tell me. Which is a stronger company? Which is a greater future? Which is less speculative? Stop screwing around with the rough. Go for the buyers. It's about marketing. He who owns the customer will own this industry. My father used to say, when I went to diamond business a little bit, he was a very smart guy in commodities, much bigger business than me. And he said, listen, I don't know what's going on there with this is rough. You get customers. You get customers, you'll be happy. We have 15,000 customers at Rafport. 15,000. And that's our strength. Okay? So I'm saying to people, go after the customers. Finally, the U.S. and Israel should work together to support the best international markets for polished diamonds. That's where our future lies. Last slide. The future belongs to those that create and support free, fair, honest, transparent, efficient, and competitive markets. Thank you.